Welcome back everybody to Volatility Trading Strategies. So recently I put out a video detailing our VTS discretionary strategy. It's made up of a wide variety of trades including stocks, both long and short, option trading, both simple strategies as well as more complex spreads and sequence type trades, and then maybe some pairs trading and even some cryptocurrency trades. I'll leave a link where you can check out that video when you get a chance. Now this past week we got into our first trade, which was part of a strategy that I called the Wheel of Fun. I'll also put up a link for that dedicated video so you can get up to speed. The first trade we took was in CVS Health Corporation under the ticker symbol CVS. And the question I got a lot this week was, why that stock? So today I'm going to go over the very important process of stock selection. So let me get into some details. So there's two basic ways that you can select the stocks you'll be using for a specific trade. And the first is to just rely on your go-to long-short list. Most traders will have a short list of stocks they either like to go long or short on. They'll be quite familiar with them, the general range of recent price movements, and maybe a good idea of the earnings picture and forward expected moves. So whenever you have a trade idea, maybe you see a certain level of volatility or a pivot point in the market, and you want to capitalize on it, you can just fall back on that go-to list of stocks. And if you don't have one, I suggest you develop it. Put together a list of 5 stocks you like and 5 stocks you don't. It won't take very long before you become familiar with them. That way, if your trade requires a high-quality stock that you could potentially own, you're going to have that. And if the trade required a poor quality company that may stay flat or even fall in price, you're going to have that too. But the second way to narrow it down is to use stock screeners, and that's really what this video is about. I personally use the scan function in Thinkorswim from TD Ameritrade, as well as Trader Workstation from Interactive Brokers. Both are very easy to use, but since you do need an account to access them, which not everybody's going to have, in today's video I'm going to use a completely free stock screener that everybody can access to illustrate my point. So what we have here is a totally free website called finviz.com. There are other free ones as well, but this one will be just fine to illustrate the process of stock screening. It looks like this when you open it, and we're just going to go to this Screener tab. Now in this top section, you've got a bunch of filters, and they're divided into descriptive, fundamental, and technical. We're just going to go ahead and click all so we can get them on the same page. Now in this bottom section, we've got all the stocks that still qualify under these selected parameters. Since we haven't clicked anything yet, we've got 7,152 stocks to choose from. Now obviously that's going to take a long time to research every single publicly traded company, so we have to start the screening process. And it's important to note here that every trader is going to have a different idea of which of these are important. Some traders may be more fundamental in nature, focusing on things like sales, earnings, debt-equity ratios, things like that. Other traders might be more technical in nature, focusing on relative strength or moving averages. For this video, I'll touch on a little bit of everything to narrow down the list. For the type of wheel trade that we opened this week, which started with a cash-secured put, what we're really looking for is a high-quality company that we wouldn't mind owning if the markets happen to drop while our trade is open. So when we go through those screener tabs, we are filtering for higher quality. If we started our wheel trade on the other side with the cash-secured call, in that case we'd be looking for a lower quality company that we wouldn't mind shorting. So the selection process will focus on different metrics depending on the type of trade we're looking at. In today's example, I'll do a basic filter for a higher quality company that we would feel comfortable selling puts on, and I'll show you why I ended up with CVS. Now for me, I've been trading for many years, and I do have a developed list already, and CVS is on it, but let's go through the screener. The first tab we'll adjust is market cap. For the Wheel of Fun, I only want large companies, so over 10 billion. You can see down below, we're already down to 718 companies. Still too many, of course, but we are off to the races. The second tab I like to adjust is dividend yield, and we're going to go over 2% here. There's 2 reasons I look for dividend, and the first is, in the event that we do end up owning the stock, it'll be a nice little boost if we can add in some dividend revenue while selling covered calls. And the second reason is that dividend-paying stocks are a little bit more insulated against market crashes because the lower the stock price drops, the more attractive the dividend yield gets. They have what's called dividend yield protection. The next tab will be beta, under 1.5. Beta is a measure of how much the stock moves in relation to the market, so we're selling an out-of-the-money put here. I only want stocks that are consistent. Next is the PE ratio, because we're looking for decent value here, so I'll click under 20. And I'll also go over to forward PE and do the same thing under 20. Now we're down to just 113 stocks. Let's also do an average trading volume of over 1 million. We do want there to be some good liquidity here. Now another very important tab is this option/short. We need options for sure, but we may also have to short the stock in the future as well, so we're going to select optionable and shortable. And again, for a little bit more consistency, we can do institutional ownership of over 50%. This is a pretty good list now of 58 names to choose from. Now our Wheel of Fun strategy is looking for high quality names that perhaps have been beaten down in price lately. So another filter we can throw on is this 50-day simple moving average, and select price below SMA 50. We can keep going further with this and get it down to a handful if we want, but 42 names is a pretty short list. At this point, we can just eyeball the list and see what jumps out at us. As I mentioned, CVS is on my list already, so of course it catches my eye. But I've traded several of these names before. Exelon, Ford, General Mills. The longer you trade, the more familiar you'll become with them. From here, I do like to pick 9 or 10 of them, and then go and see the charts for each. When I went through that process last week for our CVS trade, this was a nice looking chart. A little resistance here at the 67 level, so it was a good place to start this kind of trade. But that's the general process of stock screeners. You just narrow it down to as few as possible, and then look at the charts and see which one is the best fit. What I just went through was a very generic filter, but softwares like Thinkorswim, for example, or some other paid screeners will have many more options available to you, including some of the volatility-specific metrics that I use the most. Implied and realized volatility, put-call ratios, percentile rankings, skew, a number of different metrics that are very useful in narrowing down the field of stocks and ETFs for these trades. In my opinion, most option trading does involve harvesting the volatility risk premium rather than just making price predictions, so I do focus a lot on the volatility metrics. But for today and a cash-secured put, this process was just fine. And if the trade we're setting up is looking for a good short, we can reverse some of those filters and look for non-dividend stocks with terrible valuations and maybe high betas. Filters that if the markets do start to show signs of weakness, we can find stocks that may react more negatively than the S&P 500. There's a lot of possibilities here, but to be a successful long-term trader, you need both of these skill sets together. First, we need to equip ourselves with several mathematically advantageous trading strategies so that we can act appropriately depending on current market conditions. And second, we need to hone our stock selection skills so that we're always using the right underlying to match our trade thesis. With this 1-2 combo, we should have probability on our side and enjoy some long-term success. So if you have any questions about this video, feel free to reach out anytime. I'm always here to help. Thanks for watching. So go ahead and click the link right here, sign up for the VTS newsletter, and when you do, you're going to get full access to all of my trading strategies for a full month absolutely free. And if you are new here, please consider subscribing to my channel. Also, if you have any questions or comments, I'd love to hear from you. So go ahead and leave those in the comment section below. See you next time.